Retirement taxes in Colorado. I thought this would be fun. It's been 6 years since I did my retirement taxes state by state, so I thought it'd be fun. We'll start with Colorado because the last couple of days I've had a number of clients from Colorado. Last week, I should say. So let's dive in. So we're going to go to right here. Colorado, and we know Colorado's a blue state, and Jared Polis, he can go pound sand. But be that as it may, of the crazy blues, blue governors, Jared Polis is one of the better ones, that shows you how whack the Democrats are. But anyway, currently residents 65 and older are fully exempt from the tax on Social Security. The new law expands that exemption to people 55 and 64 who have adjusted their income below $75,000 for single people or $95,000 for a couple married filing jointly, starting in 2025. Under the law, eligible taxpayers will be deduct all of their Social Security from their state taxable income when they file their taxes, which is weird because we go to Smart Asset and they don't show that actually. So I got $100,000 of Social Security, married couple filing jointly, and you're going to see their taxes here. Are $1,397, which is odd. What if we made that $80,000? It's $517. That's interesting. So not quite sure because they said now that's for 2025. And when I did it in Right Capital had them if they only had Social Security paying no income tax. So that's kind of strange. But be that as it may, it's still pretty low. I think if all of because they say right there, if your AGI is 95,000 or lower, it looks like you're fully exempt from the tax right here. Most Colorados will be exempt from paying tax on their Social Security income. Very strange. So let's see what Right Capital says here. So I don't think you have to pay any tax. Right Capital said there was no tax. I just read right there that if your income's below $95,000 and your AGI, if you have let me show you in Right Capital. If you have $100,000 of Social Security, you have no income tax. And Crazy Dave sample, we're going to go to retirement. We're just going to say basically all their income comes from Social Security. We're going to go to cash flows. We're going to say no money coming from an IRA summary, and we'll see income flows all from Social Security, and you can see no taxes at all. We're going to go there 1040 in 2025, and there'll be no taxes here either because their entire incomes from Social Security, $100,000 from Social Security, only $11,000 subject to taxation, so their AGI is right there, $11,000. All right, so there's no tax. So I don't know what Smart Asset is saying. They got 1397 of income tax. That doesn't make any sense. But be that as it may, it's still pretty friendly. I mean, we know at most it's going to be 1.3%. I don't think it's going to be that. If your Social Security is all from there, even then, if we did 50,000 in IRA distributions and 50,000 in Social Security, then their tax is still 1397, which is exactly what I came up with Right Capital. So I think this software here is screwed up on Social Security. But be that as it may, I just want to show you here, it's still quite low. You're going to see right here, Colorado is fairly tax friendly. Let's see right here, I'm going to show you property tax. The average effective property tax in Colorado is 0.51%, one of the lowest in the U.S. That's crazy, man. A Colorado homeowner typically pays $2,000 a year in property tax. And there's a senior property tax exemption as well right here. As sales tax, you can pay as high as up to 8.3% depending on what your county you're in. So get out of one of those blue counties and you probably have lower sales tax. The state sales tax is only 2.9, but they can allow you to go up to 8.3. Where did they have the thing on? Right here. The senior property tax exemption is a form of property tax relief available to seniors who own their home. All right. The exemption is equal to 50% of the first $200,000 home value. All right. For example, if a home is worth $100,000, 50% of that will be exempt from the property tax. However, if the home is worth $400,000, only the first $100,000 would be exempt. Still, man, that's pretty good. That's a quarter of the house is exempt from property tax. To qualify, a person must be at least 65 and have owned the house for at least 10 consecutive years. So that's exceptions for widowers and widows, though. So that's pretty good, man. So Colorado is very favorable on a tax perspective. Sales tax could be high, but relatively the state of Colorado is not. Income tax are quite low, and then property tax are amongst the best in the country. And then you get that snow, you get the crazy libs that live there in Denver, but get out of Denver, it's gonna be great. You get the nice mountain air, and the snow it melts the next day. Not like New England where it stays put for freaking months on end, and you just want to kill yourself. It's like I'm just joking. So Colorado looks pretty friendly for taxpayers. I love Colorado. I think it's freaking gorgeous, man. I used to go to the Great American Beer Festival every year for 3 straight years in Denver. It's freaking fantastic. I went to the first ever Colorado Rockies home playoff game. First ever. I was there, your old buddy Josh, because that happened to coincide with the Great American Beer Festival in Denver. It was a lot of fun, man. And yeah, Colorado's great. I love it. But still an East Coast guy, still a New Englander. I don't think I can convince my wife to be a New Englander, but still East Coast is where it's at for me. East Coast is where the most. All right, God bless. Love your thoughts. See you. Bye.